Affordability in Canada's real estate market is at an all-time low. In fact, it has never been less affordable to own a home in Canada. That's according to a new report put out by RBC today. But is it really that Canada's real estate market is the most unaffordable it's ever been? Or is it really just that specific markets are less affordable than they've ever been? And we're going to get into all the details and discuss what's actually going on in this video. But before we get into it, do me a huge favor and just hit that subscribe button. It means a lot to me as we enter that race to hit 50,000 subscribers. Stay tuned for an upcoming contest on that. And I really appreciate each and every one of you who has subscribed to this channel. Thank you so much for being here. I know a lot of you have been here since day one, and I appreciate each and every one of you. Okay, so let's get into it. Let's discuss what's going on in the Canadian real estate market. RBC releasing their affordability report today. And the assistant chief economist at RBC, Robert Hogue, is saying that it is the most expensive that has ever been to own a home in Canada. And I guess that's not surprising given that we have higher interest rates and higher housing prices. But is it really true for all markets? And that's a question that we're going to answer. But I want to jump you into the headlines here real quick, show you as we do what's going on in the news on this, because this is from BNN Bloomberg. Canada's housing market has never been more unaffordable, RBC's Hogue. Obviously, with the report came a news release, and this was picked up by BNN. And the headline is obviously pretty sensational that Canada's real estate market's never been more unaffordable. But here's where it gets really interesting is there's certain markets that are really unaffordable, and there's still certain markets that remain affordable. In fact, there's a lot of markets that remain affordable. I'll show you which ones those are in a second. But let's jump into the actual report here. This is the actual RBC report. And by the way, this report, the RBC Housing Affordability Report, is something that my wife and I use when we look at investing in real estate. And it's something that we use to watch the markets. This is one of the single best reports on housing in Canada, as far as I'm concerned. I've watched it for many, many, many years. And if you take a look at the headlines here, obviously the key thing here is that surging interest rates drive ownership costs to record levels. There is a part a little bit later on where I'm going to show you just how much. It's actually surprising. It's not actually as much as you would think it is. And obviously affordability worsened everywhere in Canada with higher interest rates and with higher prices during the pandemic. That's no surprise there. But here's the key part. And this is what I want to point out in this video. Ontario, BC buyers extremely challenged. Now keep that in mind as we go through the rest of this. BC and Ontario buyers, not the rest of the buyers, BC and Ontario. And then last but not least on their bullet points here is home price declines to eventually bring relief to buyers. So they're suggesting that with housing prices coming down, obviously we've talked about the 1%, 10% rule in the past, where a 1% interest rate increase is about a 10% headwind to affordability. If we see about a 4% increase in interest rates, that's about a 40% headwind into affordability. So you can expect that we're going to see housing prices come down. Now, it may not be 40%, but that's the headwind that the housing market will be up against. There may be other factors that make it so it doesn't fall by 40%, and there may be other factors that may actually make it worse, but that's the headwind from rising interest rates. Now, in this report, they're saying that they expect benchmark prices to fall 14% nationwide by next spring, more so in Ontario and BC. So RBC is predicting a 14% drop in real estate prices. Obviously, I think we're already there. I think it's going to go down even more than that. 14%, I think right now would be a very conservative estimate with what we're seeing in the markets, especially in Ontario and BC. Now, here's where it gets interesting. I want to show you the charts here. So first and foremost, the chart for all of Canada. So this is covering every market in Canada cumulatively. So this is all in one. And what you can see is that housing prices are significantly less affordable than they were back in 1990 when we hit the previous highs. So, this is getting really scary because we're up around 65%, 66% of people's incomes going towards housing. Now, obviously, if you're looking at condo apartments, you can get away with only about 42% of your income going towards housing. But this is again for all of Canada. And these averages are brought up significantly by BC and Ontario. So while this chart may look scary, it's not telling the whole story. Let me bring up the one that is telling you the whole story. So this is affordability by each individual market. And what this shows you is that there's about 3 markets in Canada that are highly unaffordable. And there are a lot of markets in Canada that are still affordable. And what I love about this graph is that if you look at the all-time peaks, these are the diamonds, the blue diamonds, there are obviously 4, maybe 5 markets that are basically at their all-time peaks, and the rest of them are still significantly lower than their all-time peaks. So right now, if you're looking at Victoria or Vancouver area, we're at all-time highs from an unaffordability perspective. And if you look at the Greater Toronto Area, we're up there as well, and Ottawa as well. These are the markets that got really crazy during the pandemic, saw the big price run-ups, saw the big bidding wars, and it's no surprise that with higher prices and higher interest rates, these markets are incredibly unaffordable. And if you look at Toronto and Vancouver and you go back in history and look at this chart, what you'll see is that they typically are very unaffordable to begin with, and the pandemic and everything that came along with it just made it worse. But then if we jump out and we start to look at other markets like Calgary, Edmonton, Regina, Saskatoon, Winnipeg, well, even in the worst of these markets like Halifax, only 41% of incomes are going towards housing. And by the way, as far as CMHC is concerned and lenders are concerned, anything less than about 42% is still reasonable, assuming that you don't have other debts. But take a look at Edmonton, 29%. This is still an affordable city. Calgary, 38.8%. This is still a very affordable city. Regina, Saskatoon, Winnipeg. We have a significant number of the major markets in Canada that are still affordable, and not only still affordable, but still not even close to their all-time highs from an unaffordability perspective. So while this report paints this unrosy picture of all of Canada, the reality is we've got 3, maybe 4 markets that are in dire straits from an affordability perspective, and the rest of Canada is still looking pretty good. So what does that mean? Well, I think what it means is this. I think if you're looking in the super unaffordable markets, there's probably some room for prices to come down. Don't expect affordability to get below 40% in those major markets because it hasn't been there for a very, very, very long time. But I think there's probably going to be some price corrections. In the markets that are still very affordable, expect that there's still going to be competition in those real estate markets for buyers, and that you're probably not going to see a major reduction in housing prices. In fact, if you look at the RBC prediction of 14% reduction in prices, and you look at what's happened in BC and Ontario, where we're seeing prices down almost 20%, well, that tells us that those other more affordable markets are probably going to fare pretty well. So if you get a deal on a house at maybe 4 or 5% less than the peak, you're probably going to be doing pretty good. So I think the proposition of buying in Vancouver and Toronto has been scary for many, many years. In fact, I think you can go back to 2006 and say that ever since then, it's been a very scary proposition to buy in those markets from an affordability standpoint. But if you're buying in the rest of Canada, I think it's still not something that you need to be terrified of, because an average income more than buys an average home with a reasonable percentage of that income going towards housing costs. So if you're buying in those more normalized markets, I think you can do so with confidence, and you're going to be able to do it without having to worry about whether or not you're going to be able to make your mortgage payment. Now, for those of you who made it to the end of the video, obviously you've probably seen that we have our homebuyer masterclass going on right now. We're about 3 weeks into it, and the results have been amazing so far. In fact, we sold out this first cohort. But if you're looking at buying in the next 3 to 6 months, you can still go to homebuyermasterclass.ca and get put on the waiting list for the next time that we open up entries into that course. And by the way, I think that's probably going to be pretty soon, because in the more normalized markets, we're still seeing people who want to buy and want to make that move. And by the way, there's always going to be people who are moving because life happens. And last but not least, if you found this video useful, do me a favor, just hit the subscribe button. And if you feel so inclined, I would love it if you also turned on that notification bell. Oh, and make sure you check out the other video that we're going to put right here for more information on the Canadian real estate market.